Are we going from the top?
We're going to take it from the top.
And you're back.
I'm
live
back.
And in person here in the
Better than
Focus
ever.
Practice Management Studios. We're here today with Jesse Cramer from Cobblestone Capital Advisors. Jesse, welcome.
Hey, thank you guys for having me. It's a real pleasure.
We appreciate you being here. Off camera, I got a little bit of information. I've known Cobblestone for a while. I am going to say to Chris Mooney, he didn't tell me about this part, but you told me about some of the investments that you do. And I think that before we get into some of the meat and potatoes of what you do, that's fascinating. So few business entrepreneurs have heard very much about concepts of private equity investment, yet they've gone to the internet. They have read about it, and they all think, wow, that'll be easy.
Right.
Could you provide just a little bit of background on that for anybody who's ever thought about angel investment?
Yeah. Well, if you're looking for kind of the big picture answer, Brett, on angel investing or venture capital investing or anything like that, there are a lot of dollars out there chasing after too few deals. And that trend has been growing and growing. And really what that means is there are a lot of bad deals out there. There's a lot of the so-called country club capital where there's some guy who you heard of once and now he wants to buy you lunch and he's got this amazing deal for you. And what we found is that we had clients kind of coming to us with some of those opportunities. Hey, this random guy I met, my cousin, they want me to invest in X, Y, and Z. And we've got some of the investing firepower to do due diligence on behalf of our clients for those deals. And 1 out of 100 times, we'd be like, oh, this actually is really compelling. And considering we were doing all the legwork anyway on analysis, this is going back maybe 15 years, eventually we realized, why don't we scale this? And since we're doing the due diligence for this one client, can we carve out some room for ourselves and for the rest of our clients in the really good 1 in 100 deals? And so that was kind of part of the genesis of our private investing platform. It's mostly real estate focused as opposed to traditional private equity investing in businesses. But still, it's been a nice little kind of feather in our cap over the past 15 or so years.
So you're the guy to ask about this stuff. But why don't we get into a little bit more information about you?
Sure. Cobblestone,
jumping the gun a little bit out of context, but it was fascinating. I had to jump right into the meat on that one.
Yeah. Well, Cobblestone as a firm, we've been around since 1986. We're locally owned and independent here in Rochester. Fiduciary fee-only advice, which we can get into some of those terminologies. But at the end of the day, we're a financial planning, wealth management firm. So we help families figure out, a lot of time, maybe it's retirement focused or maybe it's someone who's selling a business, coming into a lot of money through the sale of that business, and they need to understand what they ought to be doing, whether it's investing, whether it's long-term tax planning, maybe it involves estate planning, thinking about multi-generational giving to their kids, to their grandkids, trusts, how all these different moving pieces, the puzzle piece metaphor is really helpful. I mean, if you think about your own financial situations, maybe you have kids going off to college, you're thinking about retirement yourselves, how you ought to be saving, how you ought to be investing, do you need life insurance, et cetera, et cetera, et cetera. There's all these different puzzle pieces. And the question is, how do you put that puzzle together? And that's what we're pretty good at, is helping our clients put those puzzles together.
So you mentioned the concept of the fiduciary, and I do think that's something that we should touch on because I think people hear it. There's a bunch of radio commercials out there that come across and I'll hear, oh, I'm a fiduciary. And I know what that means. I don't think the public at large always completely understands. Could you explain a little more about that?
Sure. It is one of those terms that I almost think is getting watered down. I'm curious to hear what you guys think about it from your points of view. But at its core, and I think maybe in the best light possible, having a fiduciary obligation means putting the best interests of your clients first and foremost. And if there are any conflicts of interest, explaining to your clients what those conflicts are. And in my industry, there are a couple different levels. There's the legal fiduciary standard that a firm like Cobblestone, we're registered with the federal SEC. We have to uphold a legal fiduciary standard. And I'll tell clients or prospective clients, if we breach our fiduciary duty, you should sue us. You should hire Brett and Beth, or someone they recommend. We should hire someone you recommend and sue us. There's also maybe a step down from that. Some advisors have an ethical fiduciary obligation where through some training or through some licensure or certification, they've taken an oath to themselves to act as a fiduciary. Now, is that as stringent as the legal standard? Probably not.
Imagine a legal standard with an oath. That's what we have.
Right.
Then you lose your license.
Exactly.
It's terrible.
And I think maybe, the contrast would be that, yes, there are some financial advisors or people who kind of label themselves as financial advisors who, strictly speaking, they do not have to operate in the best interests of their clients.
You can call yourself a financial advisor and not be subject to the legal standard that your firm is.
It is one of the parts of
did not
this
know that.
industry. It is one of the parts of this industry that is really unfortunate, is that you guys, like, I can't call myself an attorney
Nope.
if I
Right.
haven't passed the bar. I can't
can
call,
try.
Right, exactly. I can't call myself a medical doctor unless I've passed my boards, but I can call myself a financial advisor if all I do is, say, sell insurance products, and I don't necessarily have to follow a fiduciary standard.
Now, for someone like you, are you licensed or no?
Yes.
Okay.
Yes. So for me in particular, I
Yeah.
passed my Series 65. So, and that's because I'm giving actual investment guidance to my clients. And so in order to make that securities guidance, I have to pass one of those security exams.
But you don't have to be licensed to call yourself. I did not know that.
Correct.
Wow.
Nomenclature.
Yeah.
Words sometimes can matter.
Correct.
I do think that, you touched on the idea of that fiduciary concept being watered down. And I think that is in a lot of industries. I think it's become part of the language constantly changing and evolving, but people use it for a marketing purpose. By glomming on to what you did over here, I can get the benefit of that. It's the whole purpose of our trademark practice is to
Right.
stop that. Nobody could really trademark the word fiduciary. That would be a
Right.
It'd be a tough one.
Right. Right. And the hard part, I think over the last, say, 10 or 20 years, I'm interested to understand what's happened in my industry even before I was part of it. And I think at one point of time, for a prospective client to ask, well, are you a fiduciary? Does your firm uphold the fiduciary standard? Was a really important filter for that
Right.
prospective client to ask and for that firm to pass.
Would you recommend that that's still something that a client should be asking? I mean,
100%.
what would be a good way for them to vet a
Yeah.
financial advisor firm?
They still, I think it absolutely has to be one of the questions that's asked, but there are also many others. And that's my point, is at one point in time, man, that question held so much weight and could be such a great litmus test for going either yes or no. Whereas now it's a start, but then there are more questions to ask. There's this great Wall Street Journal article. I can send it to you guys in case any listeners want to follow up. There's this great journal article. It's the 19 questions you should ask a financial advisor. And it's everything from what kind of certifications do you hold? How do you charge fees? What's your investment philosophy? What can I expect as a client? What's your succession plan? Et cetera, et cetera, et cetera. Lord knows there are plenty of people who work in the financial services industry. And so kind of asking some of those questions is a great way to filter some of the wheat from the chaff.
The thing that I get involved with actually a lot with financial advisory firms is you guys have a unique succession plan obligation. And you have contracts. I've drafted a number of these, and parts of our office have drafted these. Could you explain that? Because if you're a younger person and you are approached by an older financial advisor, I do think that it goes through their head, maybe this isn't the right person because they're going to retire.
Yeah.
But in the background, you guys have a solution for that.
So I suppose, Brett, it depends on the underlying structure of the firm in question. So I think at some places, there's just a natural inherent succession plan within the company itself. So Brett, you know some of my older colleagues who are maybe 55 or 60.
They're older.
Right?
That's right.
And I have some
tell 'em right
colleagues
after.
who are more my age in their 30s, say. And so, we have some of this natural succession where, sure, over time, I will likely take over some of the some of our older client relationships. But right, if I were an independent advisor just working out on my own solo business, I mean, not only do I think about the fact that eventually I'm going to retire myself, but then, I mean, what if I get hit by a bus? And that is the type of question that is really important for clients to understand what the answer is for their particular advisor, their client. I know just enough to be dangerous when it comes to other parts of the industry, say in the broker-dealer world, where they can kind of sell their books of business. They can almost sell themselves to a different brokerage house and kind of pick up and move across the street. So I'm not exactly sure in other parts of my industry how succession planning works when it comes to nuts and bolts. I mean, I'm curious what you were referring to when some of the
Some of
deals
them
that
have
you do.
contracts that you have to have put in place based on the licensure status, so that if they do get hit by the bus, the clients know where their package is and who's handling it, who's managing it. I think the other question that I always get when we hire a lot of younger lawyers, as they look at their benefit structure and they look at, we all say you should get a financial advisor. They all get very nervous over the F word, the fees. How do you guys deal with fees and having that discussion?
Yeah. It's always a fun discussion to have.
Lawyers love it.
Right. I mean,
We have this right now.
There are a few different fee models in our industry. The way that we deal with it, so in our opinion, and this kind of goes back to the fiduciary standard, is that the fee model has to be very, very clear, and the fees have to be in between the client and the advisor, the client and the firm, not in between, say, the client and some third-party fund company, and then the fund company gives a kickback to the advisor. So what do I mean by that? Well, let's take the insurance industry, for example. In the insurance industry, these insurance salespeople are usually selling some sort of insurance product, an annuity, a whole life policy, and they receive a commission based on those sales. And so what it means is that even if that product maybe was appropriate for the client, there's still this question in the back of the client's mind, which is, well, if this is the only way the salesperson is getting paid, how can I be sure that this product truly is in my best interest? So in the fiduciary advising world, we've tried to take that out of the equation as much as we can by saying we charge a fee. In our case, we charge a fee based on the assets that we manage as a percentage. So very simple. The one that maybe many people are familiar with is 1% per year. 1% of the assets that we manage per year, that's our fee. And that's strictly between the client and the firm. And then once that fee is paid, any advice that we give or don't give is strictly in the best interest of the client, right? The client doesn't have to worry that when I tell them, listen, you ought to go out and buy a term life insurance policy, or if I tell them, listen, you really should ramp up your savings rate in your 401k, they don't have to ask themselves, was Jesse get paid more or less because of that advice? No. The fee's already been taken care of. It was clear and it's been paid. And now the advice we give you is truly in your best interest. So that's one of the kind of fee-only models that works there. Some advisors work on a flat fee. Some advisors bill hourly. As you guys can attest to, billing hourly is challenged. So I think most advisors, if they can, they try to get away from it.
They try not to call you on the phone.
But at the end of the day, right, I mean, imagine if you guys said, and maybe this will come up occasionally, but you guys are billing hourly. But imagine if you said to one of your clients, but if you do follow your advice here, some third party is going to come in and cut us a $10,000 check.
Right.
Well, all of a sudden there's a conflict there, because is that advice truly now in the best interest of your client, or were you clouded, even if subconsciously, by the fact of that looming $10,000 check?
The hourly model is, our own clients will have questions. Did you do this as efficiently as possible?
Right.
So if you're spending a bunch of time on the file, there are questions as to whether it's necessary. So again, unlike the flat rate, regardless of how much you do or don't do, it's the same. So you don't have to worry about that self-interest. That's part of the trouble with billing hourly. And I would imagine the same would be true for financial advisors.
I mean, strictly speaking, though, it's like a client could make either that argument you just made, Beth, or they could make the opposite argument. If you're charging hourly, well, sure, you could potentially be working less efficiently to bill more hours. But if I'm just charging flat 10 grand a year, well, all of a sudden I'm incentivized just to try to not work at all.
That's true.
Right. And so at the end of the day, there is a level of trust that the client has to have to say, I'm looking you in the eye. I believe that you're going to work hard for me. And over time, hopefully I'm going to see the results of you working hard for me. And I'm going to feel justified that my fee really is kind of commensurate with the work product that I'm getting.
I think that's a great question for potential clients and customers. We have a lot of time that we spend. We're giving counsel and advice similar to you. How often do you think that your client should be talking to you? Especially if they're paying on a percentage, how often do you have to reach out to them? How often should they be just touching base? For us, I think on the legal side, because of the hourly rate, they are very hesitant. But the problem is, our side of the ledger, we are not the litigation arm. Beth will do some, but we're the apple a day that keeps the litigator away. Conversely, for you guys, if they're not telling you about changes in their financial picture, you're not able to keep them in the best spot. Yeah. How often should somebody be reaching out? What's the level of contact?
Yeah.
Because everybody loves their accountant. Really, the accountants, those guys.
So a typical relationship for us, let's say, in the early days and truly the first 6 to 12 months, we might have 4 to 6 big sit downs with that client because we're really trying to learn all the facts. And it's, you don't want to sit down for an 8-hour session with someone and completely wear them out. So we break it up into a few meetings over time, right? We break it up into a few meetings over time. And you really try to get as many of the facts, as many of those puzzle pieces on the table as you can. But then eventually, most of our relationships enter some sort of steady state, you could call it, where we try to have 2 big sit downs a year, usually maybe one later in the year, late third quarter, fourth quarter, so that we can do some year-end tax planning and make sure that we've taken advantage of whatever we can during this tax year. And then usually we'll do another meeting early in the following year to say, here we are at the beginning of a new year. What do we need to do for you this year? So that's kind of bare minimum is what I'd say. On top of that, as you alluded to, Brett, when something happens in an individual's life that fundamentally changes their financial picture, we hope, obviously we can't necessarily know that unless they proactively tell us, but we hope that they do tell us because that might trigger the need for a pretty short-term conversation. Like, hey, we really need to talk about this. This really does affect your financial plan more than maybe you realize. So to that end, we're kind of always open ears. And then on top of that, we try to have a pretty regular cadence of touch points. So maybe it's a quarterly newsletter, maybe it's a monthly podcast episode, whatever it is, it's just that reminder of, hey, we're here, we're thinking about the problems. Because at the end of the day, it's like we're driving the bus. That's the metaphor. Our clients are in the back of the bus, they've got their headphones in, they're looking out the window, they're enjoying life. We're driving the bus. Yeah. And it is helpful just to have that little consistent reminder of we're here, we're thinking about it. Maybe we made some changes to your portfolio this month, maybe not. But either way, like our hands are on the wheel. Correct. Our hands are on the wheel and our minds are in the game.
Jesus does not take the wheel.
No. That's not a good financial plan.
That is not a good financial plan. It's a pretty good motto, but not maybe not for a financial planning company.
Financial planning. Yeah. Legal issues, probably not the best one there either. So what kind of clients, what kind of people are the right people to come to you and Cobblestone?
Yeah.
Like what's the sweet spot?
The niche, sure. One interesting thing about our industry is that a lot of advisors are kind of niching down and trying to specialize with specific types of clients. And when I compare Cobblestone to the rest of the industry, I look at us. So we've got, I think it's now 7 CFP, certified financial planners on staff, 7 chartered financial analysts, which is top designation for investment analysis. We have 2 CPAs and we have 1 former attorney on staff. He used to do trust and estate work. Now he's a financial planner, but he understands the T&E world. And the only reason why I describe all that to you is to say that we're equipped to deal with pretty complicated scenarios. So, on the one hand, if mom and pop are listening to this right now and they've kind of worked their entire life at Xerox and now they're retiring with some 401ks, of course we can help them. But I'm happy to say a lot of good local financial advisors could help them. But when we're talking about, say, a business owner who's thinking about a succession plan, they also have a special needs child, they're thinking about multi-generational planning and how to fund the special needs trust. You guys are helping them with some of those questions. And now they have questions about the financial side of all these problems. That's where we've got some unique firepower on staff to help those kind of people that I think maybe your average financial advisor doesn't. So really, to some extent, I say the more complicated, the better. Or at least the more complicated, the more equipped we are to help those people.
Now, the big reason why we started this was to make sure that it wasn't always we bill on 6 minutes. It wasn't for 6-minute shows. Everybody keeps asking about that. But it's also to get the interplay from your perspective as you talk about legal issues. What's your, this is a safe place. You don't have to worry. We won't bite your head off. Right. But what do you find is the ability to work with lawyers, your experience working with lawyers? What would you recommend to attorneys who are going to work with you or any of your different clients What is the good? What's the bad?
Yeah. What
I
are
think it's-
disappointments you've had with attorneys?
Right,
What do you
right.
like to see?
Yeah. I mean, and this isn't just for attorney. This is any professionals. And at times, I'm sure me and my colleagues are guilty of this too. It has to do with expectations of communication, right? And so it's easy for me, and I can fall into this bad pattern at work where, because we're all in the office together, you know, Beth, if you don't answer my email in 24 hours, I can just take a stroll over to your cube and just say, hey, did you get my email? Like, can we talk about this client situation? And then, but the real question comes, okay, now I'm dealing with an attorney at Polano and Farrow. Now I'm dealing with a local accountant. And you're busy too. You have your own other clients, and I'm trying to get an answer for my specific client. And so the challenge is we're trying to work in tandem for the benefit of our shared mutual client, and just making sure that we're setting proper expectations with our shared client on how quickly we're going to get back to them, you know, how detailed our answer is going to be. Those kind of things at times can be a challenge, just because, listen, internally, I can always kind of lean on someone and say, hey, we need to be quicker on this. But externally, like, I don't want to ruffle your feathers. At the same time, though, I want to get an answer.
Right.
So finding that balance can be a challenge.
I think from our perspective, I think every lawyer has a different take on how they engage with that. I know mine, more is better. I have a large team of people around me, and I think that to make sure that the communication stays smooth, and we've had on my legal assistant, including the legal assistants, including paralegals, and I think sometimes outside parties don't want to. I don't know if they think they're getting billed more if you CC these people, but in particular, the legal assistant is a great resource to make sure that we see it and we respond. I don't know if you've known that yet, but by all means, take that back. Let everybody know. CC the legal assistant.
That's a great tip.
Because it's a very difficult thing. I'm getting over 4,000 emails a month. We study
Wow.
that data.
Yeah.
So just responding to hundreds of them is where my next question was going to be, you know, to what extent have you seen, because for us, I have used AI as a means to increase responsiveness in email communication, to keep in touch with clients, to keep things moving. How are you seeing that impact your industry,
Yeah.
and where do you think the
It's been revolutionary for us already.
Yeah.
research, just
Writing.
responsiveness, writing, clarifying
Yeah.
things?
Totally. I know just through conversations both internally and externally that simple note taking and email writing and follow up is already saving advisors and planners huge amounts of time. I mean, my typical, I'm still taking notes by hand. I hope that I can change that by the end of
I
this
do
year.
it, but electronically.
Right. Yeah, exactly.
Yeah.
But, you know, a typical meeting for me, I'm not necessarily as effective a listener or speaker because I'm spending some of my time down here taking notes. And then after the meeting, I'm going back through my handwritten notes to compile my follow-up email. I mean, there are apps, not only general note-taking apps, there are some now specifically created for the financial services industry that I just tap the app on my phone. It's now taking all my notes perfectly. Like, it's taking better notes than I ever could
Right.
by hand.
Summarizes the meeting, drafts the follow-up
Exactly.
email.
Here are the action
Yeah.
items, and that allows me to be a better communicator, speaker, and listener during the meeting. So it's just a win-win. And you know, my understanding is 98% of clients are on board with that. Hey, do you mind? I've got a note-taking app on my phone. Do you mind if I turn that on? So even that, which is kind of like some of the simplest stuff, that's huge. I don't know of many planners who are yet truly trusting AI with, here are the facts of this client family. What do you see that I don't see? Like, you know, like, what would you recommend as part of their financial plan? How would you construct their portfolio? I'm not aware of too many advisors, certainly not who I work with, who are doing that yet. That's still very much like, I'm going to trust my own brain and my own experience with that. But the simple menial day-to-day tasks, that one is just, I mean, AI is amazingly good at that kind of stuff.
Do you have any thoughts or things? We bill by the hour, so we want to make sure that we're being conscious of our time. But do you have any other thoughts or final thoughts to go out to potential customers, clients, business owners? The number one thing about knowing about Cobblestone and what you guys can do for them.
Well, sure. I mean, my instinct to answer that question, Brett, is maybe something similar to what you would say.
Not
which
what
is
AI would say. That's right. Go with your instincts.
The value of a team of strong professionals. And like, it is really fun when I think of some of the business owners who I've sat down with, and maybe it's not every single meeting, but maybe once a year, it's like, hey, here's my corporate attorney. Here's a T&E attorney who works with them at their firm. Cobblestone, here's Jesse, and here's one of the CFPs from Cobblestone. We're also going to bring my accountant in here, and we're going to have this like 2.5 hour boardroom style meeting. We'll order lunch, and we're going to go over a lot of nitty gritty details having to do with my merger and acquisition plan over the next 3 years. Like, those meetings are amazingly valuable because we have blind spots in Cobblestone.
Yep.
The attorneys will come in and they're kind of thinking about it from this one specific angle. The accountant is thinking about it from one specific angle, but having these different practice areas and these different experts really gets to expose, a lot of the potential problems to that client, and it leads to really good outcomes. So the tip to anyone listening right now is that, it's never fun to pay fees. I get that. But when you see the value and the power of having that team of experienced professionals on your side, it's worth its weight in gold. It's worth it to pay those fees.
We say that to our clients too, like, get your financial advisor, accountant, banker, lawyer, get them all on the same page because it's amazing.
Well, clients tend to tell each one of us what they self-filter think are the relevant facts.
Correct.
So you get 3, I get 3. We didn't get the same 3.
Correct.
And the CPA got 6 other ones. And we each start to give different advice. And unless you're all at the table hearing the same information, it actually puts the client, more often than not, in this weird, who do I listen to? And it comes down to trust. And then you're getting into relationship problems. But in the end of the day, if they just pulled everybody together into one space, they would get better advice, faster, cheaper. As my wife says, it's not a question if you can afford it. It's a question if you can afford not to have it.
Exactly.
But on that one, we need to go bill some people.
Yes.
Because we're right now double billing.
Yes.
But it's been great having you here.
Thank
we
you, guys.
appreciate your time.
Real pleasure.
And
Please like, share, and subscribe.
tell your enemies.
And tell your enemies.
friends.
Tell your friends. Bye.